Hello, everyone. Welcome to our first Inc. Lifestyle Masterclass.
That's right. For those of you that don't know us, our names are Richard and Miriam Moitho. We are the co-founders of a community called Investor Nextdoor Club. And someone might have invited you just out of curiosity, just for you to kind of take a look at what they're a part of, what they're involved in. And we just wanted to kind of go over some foundational things about real estate investing. We know a lot of people have curiosity. Some people might even be on that have dabbled in it. But we find that there's a lot of hurdles that people run up against, and we wanted to be able to just kind of talk about try to simplify some of the things and kind of break it down a little bit.
Yeah, but before we jump into all of that, let us give you a little bit of background on who we are and kind of how we got involved in real estate investing. So I started my career as an engineer. I loved like nerdy, geeky spreadsheets and stuff. I very quickly realized that it didn't give me the lifestyle I wanted to have. And we meandered in a lot of different things, but we landed for a little stint in the mortgage industry. And we got into that industry because my sister was in it. It was during a refi boom. Long story about that. But that season got Richard involved in some private lending that, like, it was a area of finance we didn't even know
No,
existed.
no,
So,
didn't have a clue. Yeah, that's the best thing that came out of the mortgage industry because we spent 4.5 years in that. We had 4 offices in 4 states and trained probably about 1,000 loan officers across the country. And that industry it exposed us to a level of leverage that we had not experienced before in any of our careers. But the miracle that came out of that was meeting someone at a party. His name was John, of all names. So hi, all Johns. But told me that he was retired and that he was a private lender, and I had no idea what that was. Well, I spent a little time with John. And I found out that John was backing real estate investors on their residential properties that they were either buying and selling or they were going to get refinanced soon. So he was kind of like the non-bank option for these real estate investors to be able to take action because most real estate investors when they're starting they're not bankable and banks move very slow. Coming out of the mortgage industry, I know banks move very slow. They move at a bank's pace, not a snail's pace. And so that's where I got exposed to that. And I actually started referring deals to John and was making a pretty good chunk of change just doing that. It actually led me to raise my own capital and start my first real estate fund, which was incredible as being a private lender, an asset lender. And that term asset lending might be completely foreign to you, but all it means is we're not looking at the individual's personal financials, not looking at their credit scores. We're literally just looking at the property. What is it worth? What are they buying for it? And then making 100% loan on those. The market has changed quite a bit in regards to that, but nonetheless, there's still a lot of private lending that's out there, and its interest rates have come down quite a bit for it as well. But that was kind of how I backdoored into real estate investing, coming in on the lending side.
yeah, and then throughout the last couple of decades since then, we've gone in and out of different types of real estate investing, been exposed to a lot of different communities, invested a ton of money in our training, our education, been around different environments and cultures. And so we get people asking us all the time about real estate investing and how to get started. And so we created this great community. We'll share with you a little bit about that. But we wanted to do these master classes to give people a little bit of a taste of the different things that we expose our club members to, and to give you a sense of, okay, how do I get into this if I've got any interest? Because there's 50 million ways to get involved in real estate investing. And so we've got this short presentation. And I want you all to know that you can always ask questions. You can drop it in the chat box. We'll make sure that the chat is open for anyone to share. And then we're going to give you kind of a little bit of a high level of all the different ways that you can invest in real estate, and then how we help people, especially the middle class, to get started if they've got limited time, limited funds. And then kind of share with you the different ways you can get started and how to look for a great community. So we're going to go over this presentation. So our company, and we'll talk about that in a little bit, is Investor Nextdoor Club, and we help make real estate investing for everybody. And we believe that real estate investing should be simple, social, and smart for sure. Hold on. Let me.
So also, when people start down this road and they start exploring their curiosity, we're in the world of the internet and social media and YouTube, and there's just so much information out there, and it's disorganized. Or it leads to something that's extremely expensive just to get access to the education, which is why our heart was really to make education as well as investing accessible for all people, not just a select few. And that's really what birthed this whole community of Investor Nextdoor Club.
All right, so tonight we're gonna this you may be in a whole different bunch of different places. You might already have an interest in real estate investing. You know, you've been thinking about it, you've been talking about it, but you really aren't sure how to get involved. This is great for you. Maybe you know and you want real estate in your future, but you don't really know how. Like, how do I get my foot in the door? Which avenue do I go in? This is great for you. We're going to go through that. Maybe you're in a place where you feel stuck and you're looking for a way to get ahead. I was on a forum last night and someone was asking, how are you guys making it in today's economy? Because the reality is it's tough. So maybe you're in that place and you're looking to get ahead. You're in a great place. Or maybe you've already started your journey and you want a great community to grow with. Because so one of the things that we've learned in our real estate investing journey, you can't invest by yourself. Like it is impossible to do it well and do it as with as little stress as possible, doing it by yourself. So this is for people who are absolute beginners. You don't know anything about real estate investing. You barely know how to spell it. This is for people who've got some kind of experience. You've maybe dabbled in it. You've maybe learned some things. And it's for people who are very, very well advanced. But we're going to get into all these different areas. Now, one of the great reasons why people invest in real estate is because it's built more wealth than any other asset. So 68% of global wealth is from real estate. Think about that. Of all the wealth in the entire world, 68% is from real estate. If you look at the bottom left, it says 90% of millionaires use real estate to protect and grow their wealth. If you don't have a way that where your money is going to work for you, making money for you while you're focused on your job, you need this. You need a vehicle to have that happen. And the wealthy understand that real estate builds wealth four different ways. So the first is cash flow. You're going to get monthly income from rent from your real estate. The second thing is appreciation. Properties will always go up in value. It may go up and down a little bit, but the trend is always upwards. Then you're going to have equity growth. The tenants are going to help pay off the property as your equity grows. And then you've got incredible tax advantages, which is depreciation, write-offs, and other advantages that you'll get to understand as you understand more. Now, one thing I always tell people is this. Middle class Americans, average people, when they look at money and finances, they think of one thing. And the one thing they think about is income. And you're just focused on how do I get my income up? How do I increase my income? If I make X amount of dollars each year, this is like, I'll make it. The wealthy don't look at income. They look at cash flow and they look at net worth. So they buy things that generate cash flow that will increase their net worth over time. So that's where real estate comes into play. So they build cash flow, and cash flow is also tax advantages. That helps with their cash flow and appreciation, equity growth. That's all building their net worth. So they understand that, which is why they focus on real estate.
Now, if you look at this, the reason why is because real estate doubles in value on average every 15 years. Sometimes it doubles every 7 to 8 years, or maybe 10 years. But on average, it's been about 15 years since about 1965. Things are not getting cheaper. When they talk about affordable housing, there's affordable housing out there. It's just not in desirable areas. So where people want to live, affordability has radically changed. And unfortunately, incomes haven't kept up with that. It's just plain and simple. The cost to build is gotten more expensive. The cost of land has gotten more expensive. There's actually less labor in the workforce to keep up with construction. So supply and demand just pushes that price to go higher and higher. there's a lot of big home builders that have really pulled back. They've scaled back because they don't want to build so much and wait for the market to catch up. So that causes a supply and demand issue, but it doesn't matter if it's a single family house, if it's commercial property, multifamily, which would be apartments, depending on your terminology, all of it, that entry level shelter continues to grow in value over that period of time. So that's why a lot of wealthy people park their money there.
Yeah, so these are different types of real estate investing, and we're going to go into all of these. But the dollar signs are really what kind of money it takes to do each one of these. Just like kind of in a restaurant, $1 sign is really inexpensive
Right.
food. $4 sign is
This is the
this is
menu.
the menu. And what I want you to look at when you're looking at what kind of investing you want to do is you want to ask yourself what kind of lifestyle, what's your appetite. So are you looking to be an active investor or are you looking to be more passive? Active meaning you're going to flip a house and you're going to be the contractor and you're going to be in there and you're going to bust down the walls and you're going to do the painting. That's active, right? Or you're locating the properties and you're underwriting, you're doing all the legwork. Passive is you're giving somebody money that you trust, that they know what they're doing, and you're having them do the active part, and you're just collecting the return on the investment.
Yeah, so when you look at this terminology, it might be pretty foreign to you, depending on your level of experience. But wholesaling is basically you're not buying the property, you're getting control of the property through a contract. And the reason why it has just $1 sign is because usually you're going to have some kind of earnest money that you've got to put down. Maybe you got to put a little bit more down, but the intent is that you're going to sell that contract probably to another investor or maybe another buyer just in general that's going to maybe move into the place. And so all they're really doing is taking control of the property through a contract, and then they've got that at a certain value, and then they're going to sell that contract for a little bit more money. Maybe they're going to add another 10,000, 15, $20,000 to it, and that next person is going to take it over and they're going to finish out the project, or they may even just buy it and move into it. But that would be wholesaling. When it comes to buy and hold, and you see that you might hear when you're around circles, you'll hear the BRRRR method. It just means buy, rehab, uh,
Rent
rent, and refi. So
and
that's,
repeat.
and I'm
Sometimes
sorry,
there's another
yeah,
repeat.
you're gonna refi that out, and you're gonna take the equity out from it, and you're gonna put that into another property. So buy, rehab, refi, and then repeat that process over and over again with various properties. Now, that's typically going to be in your single family. Single family is taken on a buy and hold is taken quite a hit as far as the values of the homes are still there, even though across the country pricing has come down anywhere between 5, 10+% depending on your market, but the values are still there. But rents are having a hard time, being able to produce real cash flow for the holders of those properties just because of where the market is. But, people are going to continue to rent. It's just, it's a lot, in my personal opinion, it's a lot of risk for the money that's at play and the cash flow that you're getting in return. But there are a lot of people that use it as a tax strategy as well. So it depends on, again, what Mary was talking about. What are your goals? What are your financial goals with real estate? And listen, guys, we're only touching on the tip of the iceberg with this because once you start getting into a real estate community or you're in some kind of real estate learning, then it's going to open up so many different pathways to so many different things. The common thing, because of thanks to I guess what do you call it? Reality TV shows, flipping, right? Flipping Miami or Chip and Joanne or whatever it might be. And, listen, I've flipped over 60 homes with my funds, and it's a construction job. You're going from one job to the next. Maybe you got multiple going at the same time in a closely, in a cluster, but it is a full court press all the time, keeping up with contractors, making sure permitting, all the things. And there is a lot more money involved with it because you're going to have some kind of down payment, even if you go with a private lender. Maybe it's only 10%, but still 10% on a $300,000 purchase, is 30 grand. And then you've got your rehab, and maybe your lender's not helping you with the rehab. So there's a number of things that come into play. So you are taking a lot of risk. There's a decent upside, But once you're done, you're on to the next job. So it's job to job to job. And to me, it's not one of the better lifestyles. What I've enjoyed, obviously, is private lending, because you're basically financing these real estate investors who are trying to not use banks, and they want to be able to act with speed. But with private lending, again, the knowledge base is, and thank God for our mortgage background, is being able to underwrite the underlying asset and make sure that when you loan that money and you take that first lien position, just like a bank would, and that gets registered, that you're protected in the event of that investor, that real estate investor defaulting.
And let me explain to you, for some of you, you don't understand what the term underwriting is. Underwriting is basically assessing the risk factor of that particular deal. That's what underwriting is. So you're looking at the deal, you're looking at the area, you're looking at the value of the property, you're looking at rental rates in that area, whatever it is that's going to make that piece of property viable for the lender. So it all depends on what the lender's appetite is, what they're looking for, what their markers are, and that's how they underwrite. It's whatever parameter the lender does. And then private lending often is used for investors that are flipping homes. That's one of the things that we did in our private lending business is, unfortunately, we loved being on the private lending side, and every once in a while, we ended up being on the flipping side if a investor defaulted on it. And a lot of times that happens because they run out of time, um, they run into whatever issues they have with contractors, they lose steam. We had one go to jail, so that happened. But the private lender usually has no issue with that because they've underwritten it in such a way that it's still highly profitable for them to take the property back. So that's why there's a lot of money to be made in it, but it requires a lot of capital, a lot of capital.
And really with all of these methods, when someone's buying a property, they're looking at probably getting something about 30% below market. So these are very private. They're not listed on the MLS most likely. There's a lot of private transactions that happen more so than what happens on MLS. And so that gives a lot of room and margin for rehabbing a property, or so you can flip that property and still make a profit. The same thing as it comes to the private lender as well. They know there's a built-in certain amount of equity that if they had to take that property over, they could fire sale that property and sell well below market and still get their principal back and maybe a little bit of profit. So it's a very protected position. Unlike a bank, they might do 85, 90%, whatever it is. They have less margin to work with, which is why everything's so credit scrutiny. There's a lot of scrutiny when it comes to credit or financials and W-2s and tax returns and all that stuff. So real estate investors do love to use private lending because they can move with speed. Sometimes they can fund something in 48 to 72 hours, right? Just get it done quickly. And then it's a short-term loan. Usually it's 3 months, maybe 6 months. Some cases they might be able to stretch it out, but it's intended to kind of meet that small beginning phase of what's going to happen in that investor strategy. And we've only touched, there's so many different hybrids of all of these, but all of them apply to residential as well as commercial. And there's a lot of people that are, when they look at real estate investing, they look at residential first because that's where their mindset is. That's like, oh, I can get my head wrapped around $300,000 and so forth, when it comes to buying a property. But you look at a commercial property, it's, starting at 1 million, it's 2 million, it's 5 million, it's 10 million. And it's kind of hard, but the same principles still apply. Now, there's a little bit of different nuances when it comes to skill sets and knowing what's a good acquisition and what have you not. But that comes just with training and good mentors and so forth. But again, at the end of the day, it's you're using the same principles on how do you make that acquisition, because in every real estate acquisition, other than your personal home, your profit is made on the purchase. It's not made on the sale. I mean, you don't realize the profit till the sale, but you should already know pretty clearly what you're stepping into because you have a good buy, you have a good strategy, and you know how you're exiting, that's how you make your profit. You don't figure it out along the way. If it doesn't make sense on the front end, you're not going to have it make sense on the back end.
Wait for the other. No matter what you choose in this, and this is just the sampling, these are the big chunks
Yeah.
of possible ways of investing in real estate. But no matter what you choose, and they're all good, okay, they're all profitable. Part of your portfolio, you want to get to the Burr method at some point because that is income producing assets. Like wholesaling makes money, flipping makes money, private lending makes money, but it doesn't create that ongoing cash flow while someone is building your net worth. So you want to be able to buy, rehab, rent, refinance, and repeat. You want to have something in that category, whether it's residential or it's commercial. And there's a lot of other things that people do. You could do co-living. There's senior living. There's, getting a duplex or a triplex or a fourplex and then renting out the other places. But some part of your portfolio, you want to get to the Burr method because that's where wealth is built over time. So all this is all great, and you want to understand all these different facets. And how to get some of these deals before they're on the market is to be involved in communities. So there are local communities that you can get involved with, online communities you can be involved with. But even if you're on it with an online community, there nothing replaces a local community. When you meet people and this wasn't part of our presentation, but you need to become someone that people like to be around. Okay. So if you aren't doing some kind of personal growth, you need to be doing some kind of personal growth because people do business with people they like. And when you are someone who's likable and you're in the community, which is a local community where people get to know you, and it's the know, like, and trust factor. So when they know, like, and trust you and they realize there's a deal and they start to know you as someone who's a great wholesaler, then you'll start to hear about wholesaling opportunities before it's anywhere else out there on the marketplace.
And your best deals you find are always going to be unlisted. I mean, just think about it. If you go to Target, right, and it's on the shelf, it's going to be the highest price. That's retail. Well, somewhere along the way, it was bought wholesale, right? So it's the same thing. You really want to be able to find things that don't have a retail price, so you can build in your retail price because you're going to add value to it and then move it to someone else. So again, just touching on the tip of the iceberg of this, and one little caveat because Mary talked about, duplexes, triplexes, quadplexes. Sometimes people think of that as multifamily, but it's really not. It doesn't become multifamily until it's 5 units or more. And that's really important. That number 5 and more is because things get valued differently when they're 5 units or more. They don't, under 5 units, they're going to be treated as a residential property, which is all based on comparables of how something's sold in the surrounding neighborhood. But once it goes commercial, it's all based on the income that it produces. It's not based on comparables.
Yeah.
So there's a few emerging real estate trends that are really reshaping the market and really how to kind of capitalize on them. We're going to touch on some details here, so you can jot out pen and paper, what have you not. But there's a lot of people promoting that there's a problem with real estate. There's not a problem with real estate. There's a problem with people's strategies. And there are people that are taking advantage of what's actually happening in the marketplace in a big, big way. Really, a lot on the commercial side more so than the residential. But there is a wave of deals that is coming, and it hasn't happened in about 25 years. Discounts are happening at unprecedented levels. When I mean discounted, I mean below cost of construction type of discounts. So that could be anywhere between 20 and 25% discount off of what they sold for 2 and 3 years ago. And there's a number of reasons why that's happening, and this is one of them. See, there's a lot of people that are out there in the commercial space, and they got very comfortable at 3% interest. But if you remember in 22, interest rates jumped up double. It hasn't happened in our lifetime, but it jumped up to 7%, over double, right? And then it's hovered around 7% all the way through, about summer of last year. Now we've seen some dips, we've seen interest rates coming down, but keep in mind for 3 years, these people were carrying the properties and they didn't budget for this type of increase. Because keep in mind, um, these adjustable rate mortgages, which is about 50% of the market in the commercial space, they didn't budget for that. So they have been having to pay that out of their back pockets, or their investors have had to kick in more money, and they've just been kind of stretching it out. But now the deals they're like, we have to let these go. These are properties that are 95 to 98% occupied, and they are selling at deep discounts. Now, Warren Buffett says it best because he was in a Berkshire Hathaway meeting and someone asked him a couple of years ago and said, "What about real estate? Isn't everything on fire because of the interest rates and things are going to collapse?" And he's like, "No." He goes, "Real estate's going to be fine. It's just going to have new owners." And it's true. When we have seasons like this or cycles like this, the ones that went in very aggressive and played very loose with their numbers, they're the ones that actually do pay the price. But there's a lot of operators out there that are doing just fine, even in the climate, because they had fixed interest rates. They didn't gamble with the market. They bet on their strategy and they've been playing their strategy. And those are the ones that are standing tall right now. So another real estate, trend is really just the market growth, has resulted in a housing shortage. We had this thing, called COVID, and construction stopped mostly on single family as well as in the multifamily apartment space. So it caused this lag. And though we've got some new things that have been coming out over the recent years, it's still just operating way behind. So you got housing shortages, you got aging populations, you got evolving lifestyles and all those things. So that's really driving things that are like apartments, because that's the entry level housing. It doesn't matter if it's a high class type of apartment or average middle class America. It doesn't matter. These things are all being impacted. Self storage continues to be a huge demand, just because Americans tend to have a lot more stuff than they should. But RV parks have become a trend because people are retiring to RV parks to reduce their living expenses. They're also People are more mobile, so that's really increased the RV parks, something that would people would have never invested in before. But in the past 5 years, RV parks have been booming. And then assisted living facilities. There is just a massive shortage of beds for our aging baby boomer population. So there is movement in so many different sectors. And you do not have to become a master of all of these. It's just getting in the conversation and starting to see what are the opportunities around you. Because when you increase your knowledge and your awareness, you listen and you see things differently. That's what happens inside of a community. But when you look at affordable housing demand, I mean, through 2035, that's going to leave America 7 million rental units short. Now, that doesn't include the units that are going to be short for people to move into also. So there's just such a huge demand in all these sectors. Doesn't matter what's going on with the interest rates. Doesn't matter what's going on, in almost any given city. The demand is there. You just have to know to look for the right opportunities.
We're gonna talk a lot about commercial real estate investing because there is a level of control that you have as a real estate investor that's greater in how your property is valued, how much rent you can acquire than in a single family property. So one of the things we always recommend is for you to be able to get into that as soon as you can. Because if you own a single family property and you lose your tenant, 100% of your income is gone.
Right.
And you are 100% responsible for paying that mortgage.
Been
And
there.
it's gone. We've been there. We actually had three mortgages at one time, and ours was not the largest mortgage, our personal home. So it does not feel good. I'm going to tell you that right now. But if you owned a small multifamily property, maybe you own this with a few of your friends, and you have like 6 units or 7 units, and two people move out. Well, you still have five other people paying rent. And when those two other people move out, you can upgrade those 2 units, and then the new tenants will pay even more rent. So you've got a lot more control. And so that's why we're going to talk about that. One of the things you want to start answering for yourself as we go through this masterclass is what's my appetite? Like what kind of investing do I want to do? Do I really want to be an active investor? The reality is most people do not want to be an active investor. Most people do not want to sling a hammer and do the rehab. Most people do not want to handle tenants and get calls that their toilet is overflowing. They don't want to do that. Most people want the benefits of real estate investing, but they think they have to be an active investor to
Mm,
do that. And
yeah.
so that's just a paradigm that a lot of people don't understand, that you can actually get the benefits of real estate investing and be a passive investor. Is the return as great? No, it's not. But is the headache much less? Yes, it is. Okay. So one of the great ways for you to get involved is in communities. So we're going to highly, highly, highly recommend getting in communities because that's where you learn the ins and outs of real estate. Even if you're not ready to invest right now, even if you're not ready to make that leap of faith, we always recommend you get involved in some kind of community, either online or in your local geographic area, because that's going to be the thing that makes the greatest difference.
Now, one of the other things that's really been a trend as it pertains to real estate is crowdfunding. Maybe you're familiar with that term, maybe you're not, but crowdfunding started back in about, 2012 with the Jobs Act, and it was really to allow companies to raise money from people that were not high net worth. Well, it also gave an opportunity to people that were not high net worth to start getting in on things that would normally only be reserved for the very, very wealthy. So this is what makes investing available to everyone. Now, crowdfunding, you can probably think of there's different types of crowdfunding. There's donation based, there's debt based, there's equity where you're getting interest in a company or something of value. And maybe you've heard of GoFundMe. That's a donation based type crowdfunding. But when it comes to crowdfunding in the real estate space, it's relatively new over the past 5 to 7 years, more so. It's mostly been around with startups, technology, entertainment, and things like that. But over the years, it's gotten more mature, and now there's a clear pathway how crowdfunding can work inside of real estate, traditional real estate that was normally not accessible at all. So crowdfunding just allows you to have fractional ownership in properties that would normally have a minimum investment of 25,000 to where now you're able to get in on, hundreds or just a few $1,000s just to get involved on crowdfunding.
To just simplify the thought process or the concept of crowdfunding is just imagine, you know, 500 to 500 people pull their money together and they buy real estate. So that you are not 100% liable and responsible for that property. All the people that have contributed into the crowd fund now have a partial ownership, what we call fractional
Right.
ownership of that property. So it's a great way for you to get into real estate investing without having all the risk, without having a huge amount of capital, without having to have all the education, understanding, background information. As long as you get involved in a crowd fund where the fund manager really understands what they're doing, you're in a great place. And it really does. What I love about crowdfunding is it just opened the door for
Yeah.
everyday people to get involved in real estate investing.
Yeah, it doesn't matter, what kind of job you have. You could be working behind a counter, you could be, white collar, you could blue collar. It doesn't matter. It opens the doorway for 87% of the population that would normally not have access. But because of crowdfunding, it opens the door literally to everyone to get a piece. And listen, I've talked to people in, let's say, San Diego, like, I can't buy property in San Diego. It's like, I understand, but you can own real estate somewhere, right? And that's where crowdfunding really makes it accessible. Now, when you look at the types of projects that are out there, it just simply lets people invest small amounts of money, online through a portal, into various real estate projects. In our case, we have a fund. Instead of buying the whole entire property yourself and having to be the operator, it just allows you to be that passive partner alongside with that operator.
Yeah.
So, bottom line is wealthy people have been doing this for decades. The laws and regulations have been on their side for a very long time. And, my job, for a long time has been always how do we make things accessible to everyone because everyone deserves their piece of the pie. They deserve their slice. And all it requires is a little bit of knowledge and a little bit of education, and then most importantly, a little bit of access. I think a lot of times people kind of feel like, well, if I was more in the know or if I got into certain rooms, then I would be able to, I would be able to participate in things. And whether you've thought about investing or not thought about investing, and we're not asking for an investment tonight, just so you know, I had the same experience. There was a long time. I've been self-employed since I was 18 years old. I've had my own companies that entire time. But there were knowledge gaps that I hit, and I felt like I couldn't get into certain rooms. And then I found some mentors, and I learned how to ask better questions. And when I asked better questions, I got better answers. And then I got invited into other rooms, and I started to build up that network. And the same thing can happen for any one of you, that you can have access to whatever you want. You just got to make sure you're putting yourself around the right people and being in the right rooms, which is why we focus on this. Is you don't need to know everything, and you don't need tens of thousands of dollars. You just need the right community, the right education, and the right opportunity. And you do it in your time frame, not some pressure, not a guru telling you what you need to do or how to do it. You learn the way you need to learn. And the greatest experiences and the best times of Mary and I's lives when we were in proximity of people that were either a few steps or a lot of steps ahead of us, and we got to be in dialogue with them. We got to borrow their experience, which became our wisdom, which meant we made less mistakes. We still make mistakes. I mean, there's no one does anything perfect, but making less mistakes is going to save you a ton of money in no matter anything that you're doing.
So what we did is we created this real estate investing club for everyday people to help them become investors. So it doesn't matter what your age, what stage of life you are, your income level. We have a place for you where we're going to create a safe environment for you to learn and become an investor. And our club members have exclusive access to our crowdfund, which is a real estate crowdfund. It's a great passive way for you to start investing in real estate. And these are some of the things that we invest in. They're typically things that are high demand with incredible cash flow. So just imagine that you invest in the crowdfund and you have a little piece of each one of these property types. You don't own one altogether by yourself, but you own a little bit of each one of these. And that's what makes crowdfunding so great and unique is that it limits your risk and it diversifies your investment in all these different properties.
Absolutely. So, power of community is real simple. Real people, real support, real progress. That's what allows everything to happen. Every time we get together in person or online with our people, something new always gets brought to the table and they see something differently. A big thing that we focus on is we focus on personal finances because, listen, people would invest more if they knew more and if they had more money to invest with. So sometimes one of the early steps is to show people where they can shave off. How are you getting that debt paid down? How are you creating the margin you need every single month so you can fund your financial goals for the future?
We're if anybody has any questions, you can drop it in the chat. But that's a little bit of information about our real estate investing club. If you want to know more information about what we do, what we offer, whoever it was that invited you to this Zoom or to watch this recording, they can get you more information about our community and about our club. We really are committed to helping everyday people become investors, not just empower them. We give them a vehicle step by step. You're starting here, you want to get here. We're going to give you the pathway to get there. And we're going to teach you how to implement the strategies that the wealthy use to have true financial security. And so, for those of you who want to control your financial future, this is a great place to start. So, it's designed specifically to help people of all ages and all stages of life, regardless of your personal income.
Absolutely. Well, we appreciate you guys being on, and we look forward to seeing you next week. Feel free to invite a friend or a guest. And thank you, Mario. Appreciate that. But we are really here to serve and help people get to that next financial goal.
If you're also curious and you want to see a full presentation, we've got a live event that's happening on Thursday at 7 p.m. Central Time right here at the same location. If you're in the Dallas-Fort Worth area, we do it live in Plano, Texas. You can get the details from your friend or family member or colleague that invited you here. But we're excited you joined us, and we will see you again next week for another Inc. Lifestyle Masterclass. You guys have a great night.